Hey guys, what's up? Welcome to the channel. Thanks for checking in. Wanted to do a cool video today about the do's and the don'ts of applying for a mortgage. So let's dive in. When you're applying for a mortgage, we're going to look at your income and we're going to look at your debt. Okay, so the first thing that you would want to do, and this is good if it's done in advance actually, is to pay down debt, because this way when we run your credit, we're gonna see less liabilities and be able to use more of your income. Now, if you don't pay down debt, and we do see that, you do have that opportunity to bring more money to closing to omit those liabilities. This way we can use more of your income to qualify for a higher loan amount if you need that. But if you were gonna do it in advance before we run credit, and obviously we see those liabilities, that would be a wonderful thing to do. Okay, that's number one. Now, number two, if you're gonna use funds that you've been keeping in your home from, just savings from your job, and I'm talking about cash, okay? The only way we're able to use cash is if it's sourced, meaning if we know where it came from. Imagine if a lender or an underwriter sees you depositing like $30,000 into an account and your monthly wages are like $5,000 or $8,000. We know it didn't come from your job, so where did it come from? There's two ways around that, okay? Number one, don't use it. Number two, if you were gonna use these type of funds, because we're gonna produce to the lender 2 months worth of your assets or your bank statements, I would say put it in about 90 days before. This way, when we get 2 months worth, it doesn't appear as a very large deposit and then creates an issue for you, okay? So those are two to-dos that I would recommend to you. Now let's talk about the do not. And there's a really big obvious of a do not, which is do not extend credit, meaning don't buy anything. Don't make any large purchases that would affect what you could actually qualify for. Don't co-sign for anything. A lot of people that I talk to, a lot of our borrowers, they say, yeah, I just co-sign for it, I don't really pay for it. Well, this creates an issue, because if you can document somebody has been paying for something for the past 12 months, you can actually omit that liability. But if day one you co-sign for somebody and we don't have a 12-month history, that liability is the same as if it's yours, as if you're liable for paying for it. So I would highly recommend, if you're looking to buy a place, do not co-sign for anything, okay? Don't extend any debt on credit cards or autos or student loans or anything else that you don't have to do, okay? That's number one. Now let's talk about do not quit your job, because if you're quitting your job in the middle of the transaction and the lender, which they will, call to verify employment, and you no longer work at the company, we will not be able to use the income that we dictated to the lender that we could use to qualify you, okay, from your employment. So don't do that. A third thing is transferring money between your accounts, okay? Don't do that, because that kind of gets real sticky, especially if we're trying to source a certain amount of money that's needed for your down payment and your closing costs, and if there's a requirement for, reserves, which is extra money for people who happen to own other pieces of real estate, then you start having to identify multiple accounts because you're moving money around. Do not do it. It becomes a really big nightmare. Take my word for it, all right? Another thing is running your credit. Do not run your credit because the lender is automatically going to assume that you are extending debt. They're gonna wanna know whether you did or not, or they're gonna want a letter of explanation, because it actually takes about 30 days for debt to show up on your credit report. So all they can really see is that you pulled credit, because most lenders do what we call a soft pull before closing. It's kind of like a quality control type of a thing, meaning they check to see if you extended any type of debt before they issue you your loan documentations, okay? So hopefully this kind of gives you a little glimpse of what you could do, what you shouldn't do. Clearly, we're always available if you have questions, but enjoy the content, consume it. Give us a big thumbs up if you like it, and please subscribe to our channel if you haven't already. And I appreciate you watching as always. We'll catch you on the next video. Take care, guys. Bye-bye.